Exclusive focus on green issuances, benefits, challenges, and investment opportunities. Introduction. Green bonds are debt securities that are dedicated to financing or refinancing environmentally friendly projects. They are the most common type of green issuances. Definition of green issuances. Green issuances are bonds that are issued to fund projects that address climate change and have environmental benefits. The proceeds from green bonds are used exclusively for these projects. Renewable energy. Renewable energy is a type of energy that is generated from renewable sources and is considered environmentally friendly. Renewable energy projects are commonly funded through green bonds. Energy efficiency. Energy efficiency refers to the use of energy efficient technologies and practices to reduce energy consumption. Projects that promote energy efficiency are often funded through green bonds. Benefits of green issuances. Reduced carbon footprint. Green issuances help companies to reduce their carbon footprint by financing projects that promote sustainability and environmental protection. Enhanced reputation. Green issuances enhance the reputation of companies by demonstrating their commitment to environmental sustainability and social responsibility. Access to new pools of capital. Green issuances provide companies with access to new pools of capital by attracting investors who are interested in sustainable and social responsible investments. Positive impact on the environment. Green bonds provide investors with an opportunity to earn a return while making a positive impact on the environment and promoting sustainability. Challenges of green issuances. Lack of standardization. The lack of standardization in reporting is a major challenge for green issuances, making it difficult for investors to compare and evaluate different green bonds. Limited supply of green bonds. The limited supply of green bonds is another challenge for green issuances, as it can make it difficult for investors to find opportunities to invest in green projects. Risk of greenwashing. Greenwashing is a major risk for green issuances, as it can mislead investors and undermine the credibility of the green bond market. Market trends of green issuances. Green bond issuance. The global market for green bonds has grown exponentially in recent years. This growth is driven by increasing demand from investors and issuers to support sustainable projects and initiatives. Impact on environment. Green issuances have a significant positive impact on the environment, supporting the development of sustainable projects and technologies that reduce carbon emissions and promote climate resilience. Comparison of green issuances with traditional issuances. Use of proceeds. Green bonds are issued to finance environmentally friendly projects, while traditional bonds can be used for any purpose. The use of proceeds for green issuances is restricted to projects that have a positive environmental impact. Reporting requirements. Green issuances have more stringent reporting requirements compared to traditional bonds. Issuers of green bonds are required to report on the use of proceeds and environmental impact of the projects financed by the bond. Pricing. Green issuances often offer lower yields compared to traditional bonds due to their perceived environmental benefits. However, the pricing of green bonds can be affected by market demand and other factors. Regulatory framework of green issuances. Green bond principles. Green bond principles are a set of guidelines that aim to promote integrity in the issuance of green bonds, ensuring that the proceeds of the bond are used for environmentally sustainable purposes. Climate Bond Standard. The Climate Bond Standard is a certification scheme that sets criteria for determining whether a bond is aligned with the goals of the Paris Climate Agreement, ensuring the bond's proceeds are invested in projects that address climate change. Investment opportunities in green issuances. Green bonds. Green bonds are fixed income securities issued by corporations or governments to fund environmentally friendly projects. Investing in green bonds can provide attractive returns while supporting sustainable development. Green loans. Green loans are provided by banks and financial institutions to fund green initiatives such as renewable energy projects, energy efficient buildings, and sustainable transportation. Investing in green loans can provide a steady stream of income while supporting a sustainable future. Conclusion. Green issuances are an important tool for financing environmentally friendly projects and addressing climate change. The market for green issuances is growing rapidly and offers significant investment opportunities as investors increasingly focus on sustainability. Thank you.